Hi everyone, it's Luke and Garrett from Bring Home Denver, your local real estate experts. Today we're coming at you to talk a little bit about creative financing. You may have seen some of our recent emails about buying down your rate or assumable mortgages. Today we'd like to go a little bit deeper into some ideas to help in the current rate environment.
Yeah, fantastic. And one thing to keep in mind as we talk through these is they're beneficial to both buyer and seller, in that buyer's typically going to pay a little bit less in interest, and the seller can offset some taxes or defer them to later years and get your home sold a bit quicker for potentially more money. So the first couple that I want to talk about both involve the seller maintaining their existing mortgage. So the first one's just traditional seller financing, where they become the bank and the buyer basically pays them monthly and they keep their existing low mortgage in place. The next one is called a wrap mortgage, where the buyer takes out the difference for their down payment between what the seller owes and what the purchase price is. So in both of these scenarios, the seller is making money monthly. They take a large down payment typically that is going to cover their initial costs if they want to find a new home, and it offsets their taxes for that year.
Thank you. A third one is referred to as debt service coverage ratio, or DSCR, and this is where a lender is qualifying the property, not necessarily you and your paycheck or your credit worthiness. So only able to be used for investment properties, but you're typically wanting something where the rent payment or the rental income is covering at least 125% of the mortgage.
And that's a good one if you're looking for multifamily. The last one that we want to talk to you today about is a lease option. And this takes place traditionally when a buyer and seller want to work together on a home, but the buyer wants to rent it or lease it first. And so they agree on a set price at a set time that may be 1 year, 7 years in advance. And during that time, the buyer will rent the home, pay a lease option fee to the seller, and then at the end of that lease option, they have the right to buy that property for that set price that they agreed on potentially years ago. So this helps the seller because they get the best of both worlds. They have a rental and then a set sales price. It helps the buyer because during this time they can work on their credit, they can wait for rates to come down, and then when they buy the house, traditionally they have a lot of equity already built in.
We're just scratching the surface of these two. There are others, and we can go way into more detail. So the important thing is you're working with creative agents. You're working with a really good lender and a good team who can help you on either the buyer or the seller side make this a great experience for you, regardless of what the rates are doing right now.
Absolutely. And we understand that this may not be your ideal environment to buy or sell. We want to help mitigate that and make this a positive experience where we can save you some money.
Yeah. Thanks for tuning in. See you next time.